Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The S&P halted its longest rally in about 20 years, while Ford suspends its full-year guidance warning that auto tariffs will crash into profits. Gaza step up. Israel's security cabinet votes to intensify military operations, calling up tens of thousands of extra reservists, while also deciding on aid distribution in the Palestinian territory. And we'll speak to Citi's head of MENA, ECM, on plans for a new residential REIT listing in Dubai, capitalizing on the Emirates' real estate boom. Well, it has just gone 8 a.m. across the Emirates. I'm Jumana Barsechi in Dubai. What we had yesterday was a bit of a dip for the S&P, ending its longest streak in almost 20 years. So we've been speaking about the day-to-day incremental gains in the S&P, but yesterday it did actually end slightly in the red. And this on back of, again, uncertainty on macroeconomic data, even though we had an ISM services print surprise at the upside. But on the earnings front, Ford pulling their guidance, Palantir dropping more than 9% in after hours after disappointing with their earnings. So some of the corporate earnings have disappointed to the downside, in addition to the commentary that's coming through vis-a-vis some of these corporates and how they see the outlook. So on the back of that, we did see S&P dip yesterday in trading. Today, futures are down about 15 basis points. And of course, the main event for the week is going to be the Fed meeting tomorrow. So all eyes on that. As for the handover from Asian equities, Japan is out today, but broadly, we're looking at a more positive session, up about 0.2%. Keep an eye on the China data, though. The Caixin China Services PMI index fell to 50.7. That is the lowest level in 7 months. So again, another representation of just how this environment is beginning to impact the Chinese economy. That has come through with the Caixin numbers. But Brent, a bit of a recovery play today, so up 1.6%. This time yesterday, we were trading at around $59 after that OPEC Plus announcement, but some stabilization has come through. The big question, of course, is whether these levels actually hold. That's the picture for Brent this morning. And then the USD is getting a bit of a bid today, up about 0.1%, even though there's been a lot of focus on some of the price action in the Taiwanese dollar. So let's switch over. I just want to highlight to you, you may have seen or read a lot about what's been happening with the Taiwanese dollar. We're going to talk about it in just a moment. But here you can see that versus the TWD, the dollar is basically at its most oversold in 17 years. So it's been a really long time since we've seen this level of extreme positioning on that particular currency pair. And that is on back of a lot of the price action that we've seen with the TWD strengthening about 10% in the last couple of days versus the USD, the biggest move since 1988. And on that topic, Taiwan's markets regulator has indeed met with some of the island's largest insurers as a skyrocketing local currency piles pressure on hundreds of billions of dollars in U.S. bond investments. MLife strategist Mark Cranfield joins us now. Mark, I guess there are two ways to look at this. Some people are saying that the fact that the Taiwanese dollar is strengthening so much is perhaps a signal that the authorities are allowing it to happen in anticipation perhaps of a potential trade deal with the U.S. Alternatively, there's another view, which is that this is simply on back of unhedged activity coming out of the life insurers. They are being forced to adopt these positions because of legacy ownership of U.S. assets that they hadn't hedged.
It's probably a bit of both. There's clearly a lot of speculation in the foreign exchange market that there could be a trade deal between the United States and the US, Taiwan, and that investors are thinking that the Taiwanese dollar could be used as one of the ways in which Taiwan gets the United States to agree to some of the things that it wants in a trade deal. Now, if you look at the terms of trade for Taiwan, it carries a very large surplus. So it is naturally a currency which has been for a long time undervalued relative to the fundamentals of its position in a trading basis. So that would naturally mean that the Taiwanese dollar would have room to appreciate. Now, not necessarily on the speed with which it's appreciated over the past couple of days. That's really quite exceptional. But if you add in the potential speculation on that, plus the fact, as you were saying, life insurers tend to underhedge their US dollar portfolios. They own huge amounts of US investments, particularly in the bond market, treasuries and other parts of the curve. And they typically just leave those US dollars and enjoy the returns from that. They don't do too much to hedge the Taiwan dollar side. Then you have the large Taiwanese companies who earn most of their revenues in US dollars as well. They also are maybe, you could say, a bit lax in doing their hedging. So you have a natural bias towards major Taiwanese people who would need to sell US dollars to go back into Taiwan. And if you throw in a bit of speculation as well, this is what the result is. You get a sudden move in the market that even overwhelms the central bank. There were suggestions that the central bank was trying to stabilize dollar Taiwan in the market. It looks as though they did again last night. But particularly on Monday, the volumes were just so huge, they were struggling to cope with the amounts of money that were going through the market.
Mark, what are the broader implications if this move continues? If we continue to see a strengthening of the Taiwanese dollar, what are the broader implications, not just for Taiwan, but on the dollar, which is the other side of the trade? Is this an acceleration? Is just going to add to an acceleration of the greenback weakening that we've seen this year?
Yeah, this is stage 2 of the US dollar changing from being the most important currency. Of course, it's still a very important currency, but the shift away from US dollar assets, this is stage 2. Stage 1 was the move into the euro, the yen, to some extent the Swiss franc. That was part of it. Those currencies have mostly held the gains, which they achieved earlier this year. Now we're moving into emerging market currencies, into Asian currencies. The US dollar looks as though it's entering a long period of underperformance, and it's now going global. It is no longer just about G10 currencies. It's switching to other parts of the world. The US dollar will remain the main reserve currency for a long time, but you can see that people are starting to see there are opportunities in other places way beyond the United States. There are also, investors are expecting that the next move from the Federal Reserve, whether it's soon or later, will be to lower interest rate. Yeah. That obviously weighs on the US dollar as well. So from whichever angle you look at it, things are stacking up against the US dollar, and now Asia is taking part in that. Well,
thank you for bringing us the analysis. Many people have been paying close attention to what's been happening with the TWD Bloomberg MLive strategist, Mark Cranfield. Thank you. Now, the Trump administration continues to tease trade deals that could shift investor sentiment again. The trade uncertainties were top of mind on the first day of the Milken conference in Los Angeles, where Treasury Secretary Scott Bessent argued that Trump's policies will solidify the U.S. position as the home for global capital.
America is the Schelling point of global finance. We have the world's reserve currency and the deepest and most liquid capital markets and the strongest property rights. For these reasons, the United States is the premier destination for international capital, and the administration's goal is to make it even more appealing for investors like you.
Scott Bessent speaking at the Milken Institute. Let's get to our China correspondent, Minmin Lo now. Minmin, I can imagine tariffs were top of mind for many of the investors attending the Milken conference. Did the Treasury Secretary go out of his way to allay some of these investors' concerns about what tariffs will do to the U.S. economy?
Yes, that was what all his speech was about. I mean, you heard Mark Cranfield earlier saying that the U.S. dollar could be set for a longer-term decline. And there you have Scott Bessent talking about how U.S. assets are still the place for investors to park their money in. He also spent some time explaining the rationale behind Trump's policy, saying that these tariffs, tax cuts, deregulation, these are all interlocking parts of an engine that is supposed to bring back American clout. And the sentiment there among investors, it's not so much that they don't agree that maybe trade rebalancing needs to happen. It's that they're saying do it, but do it fast, do it quickly, because what is causing a lot of upset in markets and in business confidence is that uncertainty, the unpredictability, the messiness in how everything is being implemented. That's why many corporates have been pulling back or withdrawing their forward guidance, putting on hold investments and spending for now as they wait for more certainty. And we have Scott Bessent also saying on CNBC that we could see significant progress in U.S.-China trade talks in the coming weeks. Again, that is a mixed signal given just a day ago President Trump had said U.S. and Chinese officials had been talking about very different things. Meanwhile, the Chinese government has pretty much been silent since they acknowledged that they are considering the possibility for trade talks. So a lot of things, if you cut through the noise and cut through the sound bites, materially what has really changed? Actually, not very much.
Yeah. Min, but then when it comes to trade deals, it wasn't that long ago that Scott Bessent was saying that Japan are top of the list in terms of countries that they're looking to seek to do a trade deal with. India as well. How much progress has been made on that front?
Yeah, so when it comes to India, the country is proposing a 0-for-0 tariff policy, a reciprocal tariff-free policy on certain sectors like pharmaceuticals, auto parts, steel and aluminium. This comes as the Trump administration announced that they could be announcing pharmaceutical tariffs in the next 2 weeks. So India is proposing this reciprocal tariff up to a certain level, and beyond that threshold, regular tariffs can kick in. And meantime, Washington has been asking India to address some of the non-tariff barriers, such as some quality standards that foreign manufacturers have to meet in order to sell in India. India has said they're willing to consider that or to sign an agreement with the U.S. where they mutually recognize each other's standards in certain sectors, again, such as medical devices. Not clear whether this will come through in the final package, but it's all part of efforts to expedite that deal that they want to sign before the end of the 90-day pause. Japan as well, we're getting local media reports saying that the U.S. is refusing to exempt Japan from the reciprocal tariffs. They may cut the country-specific 14%, not clear by how much, but a lot of countries are really watching what Japan will get out of its trade deal as a potential template for their own respective trade negotiations with the U.S.
Yeah. And of course, the clock is ticking as ever. It is a 90-day reprieve, and people maybe forget that. China correspondent Min Lo, thank you so much. Well, equity futures still remain under pressure today after the S&P 500 snapped its longest rally in about 20 years. Markets weighing the stronger economic data out with persistent pressure to allocate away from the U.S. Joining us now is Ankita Pathak, Global Equities Fund Manager and Macro Strategist at Ionic Asset Management. I want to pick up on some commentary that the Treasury Secretary Scott Bessent made at Milken yesterday, where he was obviously trying to address some of investors' concerns about tariffs. But then he also said, look, this is part of a three-point plan. We've got tax cuts, we've got tariffs, and we've got deregulation. So that is the bigger picture of what this administration is attempting to achieve, i.e. he's pitching it as a pro-growth plan in the medium term. Do you find that reassuring?
Hi, good morning. I think that was the whole plan even when the Trump manifesto was first laid out. The definition of Liberation Day always was implementation of tariffs and then tax cuts and deregulation to come with it. The truth is, so far, the markets and the economies have only seen the bitter pill part of it, which is the tariffs. We have no idea as to how they will be unrolling the tax cuts, especially given the fiscal situation is very, very tight at the moment. And also the deregulation has not progressed in ways that it was previously anticipated right when Trump came into the power. So I do think if all three of them are rolled out at once, it can be positive U.S. markets. But so far, we've only gotten the worst news of all, which is the tariffs, which it's on a 90-day pause. It resumes on July 8th. A lot of global uncertainty is happening now. As we speak, different economies are trying to come up with novel solutions. But I think tax cut plus deregulation should be a part of the package. Otherwise, global growth slowdown will be very hard to rule out.
Yeah. What do you make of the recent price action in U.S. equities? We've had incremental day-to-day gains that snapped yesterday. The winning streak snapped. A big event coming up this week in the form of the Fed. What do you think of market direction from this point onwards?
Sure. I think it has been a very, very volatile market. The pullback has happened from April 8 lows, but YTD, the markets still are negative about 3.5% So net, it's not been a very bullish undertone in the U.S. market so far. What happens now is obviously how these trade policies, formulate. Trump, in fact, yesterday went out to say that he's also okay to exempt China, which is a new development, again, that has come in. So some dole or help from the fiscal or the monetary part is what the U.S. economy will need. I don't think so any of it is coming in this Fed meetings, which concludes on May 7th. I think it's going to be a status quo on the Fed meeting. But the formal expectations from Fed on, inflation and employment and GDP are not due this meeting. They're only due in June. So all eyes will be on the guidance of Fed Chair Powell. Initial estimates suggest that tariffs will be inflationary for US, but will also raise the unemployment numbers. If that was to true, then Fed has no options but to factor in rate cuts late this year.
Yeah, so don't you think that the bar for the Fed chair at the Fed to sound dovish this week is a lot higher after those hotter than expected jobs numbers that came through on Friday? It's going to be difficult for the Fed chair to give the market what it wants to see in terms of dovishness for the outlook.
100%. And there's a lot of contrast in the data if you look at US between the soft data and the hard data. With soft data, I mean data like consumer confidence, maybe also PMI, manufacturing to an extent, etc., which was kind of slowing down. But if you look at hard data, if you look at jobs added, which was 40,000 higher, services PMI, and some hard data that is getting released in the US economy, the data is not weak as we speak today. It may slow down in coming quarters, but right now the economy has stood the test of the time. So while policymakers, especially on the government side, would want Powell to deliver a rate cut, the clear reason to deliver that cut is hardly visible. I think he will sound off some kind of an accommodation. Maybe the speed at which they are sucking out liquidity could slow down. That could be a good green signal to give to the markets, even with a rate cut. But I don't think an explicit rate cut is coming in this policy.
Yeah, no, May would be obviously very unlikely. Let's see if June is still a live one. Ankita Pathak, Ionic Asset Management Fund Manager, Global Equities and Macro Strategist. And coming up, Israel is preparing to intensify its military operations in Gaza. More on this new plan and what it means for the future of the territory next. This is Bloomberg. Israel's Security Cabinet has voted to intensify military operations in Gaza and call up tens of thousands of extra reservists, while also deciding on a means of distributing aid in the Palestinian territory. Israel implemented the aid ban in early March, saying it was necessary to force Hamas to surrender and release the hostages it still holds. The United Nations condemned the move, saying it would worsen the shortages of food, water and medicine Palestinians are facing. Bloomberg's Dan Williams is visiting Dubai from Jerusalem and joins me here on set. Good to have you with us on the set, Dan. Talk to me about this latest plan out of Israel. What is the objective here?
I think the objective for now is signaling intent, signaling seriousness. Israel for 6 weeks now has resumed its offensive against Hamas, but in relatively small measure. It's taken over 30% of that territory. It has not succeeded in its declared aim of pressuring Hamas into concessions on the issue of releasing hostages. So now it is saying it's willing to go all the way, potentially reoccupying the entire territory. However, it would appear that this is not imminent. It would appear the Israelis are putting it off at least until Trump's visit to the Gulf next week, President Trump, ends. It would appear that they do not want to upstage what is an important visit to this part of the region with quite different objectives for the U.S.
Well, I was going to say, what role, if at all, is the U.S. going to have? I mean, if they go ahead with this latest plan, does it have the backing of the U.S. administration at this point? Do we know that the U.S. would be supportive of Israel's move?
I don't think there's any doubt. The president has staked his personal prestige on getting these hostages out. He had some very strong words and threats and ultimatums for Hamas himself only a few weeks ago. And in the last 24 hours, he supported Israel's argument that as long as the Israelis don't control the territory, as they don't control food distribution, Hamas, in his words, takes the food away from Palestinians who really are in dire straits.
What is the plan for the resumption of humanitarian aid? Because the situation really is dire, as you hear from United Nations and many other organizations that have really tried to shed light on the situation in Gaza with so many children going hungry. What is the plan for the resumption of humanitarian aid at this point?
Israel wants to starve Hamas of weaponry, of fuel, of food if need be, if that's what it needs to declare victory. It doesn't want to starve the civilian population. To hear Israeli officials tell it, they would take over territory, clean it of Hamas presence, make sure Hamas cannot get in, and set up what they call humanitarian bubbles. And that way they'd have control of distribution, which would be conducted by foreign civilian private groups rather than the military.
Are the ceasefire discussions all but dead now? Have they collapsed completely?
Again, a ceasefire would come in a deal with Hamas that entails a hostage release. For now, they're not happening. Hamas has proven very dogged, and there's a big debate in Israel whether going all out would essentially endanger those hostages, whether the Israeli government should capitulate on its major war goal of destroying Hamas in returning those hostages. Those two aims together seem hard to reconcile.
And Dan, you're obviously here in Dubai, so you took a flight to Dubai the other day, and you happened to witness the falling of that missile right next to Ben Gurion Airport over the weekend. And that was quite remarkable because I believe it was the first time that a Houthi missile got so close to the Tel Aviv airport. What does that tell you about the new phase that we're entering into with the Houthi attacks on Israel?
I think it shows that with industrialized societies, industrialized economies, a group like the Houthis, a subnational group which is very determined, potentially very hard to deter, can actually exact a lot of damage with one lucky strike, as in this case. It's worth noting, this was my guess having witnessed the impact explosion. It didn't seem to me like a ballistic missile in terms of the payload weight, the noise of the explosion, the smoke that went up. And sure enough, it turns out that according to the Israeli bomb disposal experts who looked at it, the warhead was far smaller than expected, less than 100 kilos rather than half a ton. It appears that the Houthis are actually improvising weaponry, reducing the weight in order to reach into Israel. So yes, there's damage, yes, there's threat to life, but it's also performative.
Yeah. Dan, good to have you with us in Dubai. Bloomberg's Dan Williams, thank you very much. Well, still ahead, Indian billionaire Gautam Adani is eyeing investment options in South African ports. So the details coming up later on the show. This is Bloomberg. Ford shares fell in extended trading after it suspended full-year guidance and warned the Trump auto tariffs will take a toll on profit. The company says the levies would cost it about $1.5 billion in adjusted earnings before interest and taxes. Ford cites several factors in withdrawing its earlier forecast, including potential supply chain disruption tied to the trade war. Mattel also citing the Trump tariffs as it withdrew its forecast for a return to sales growth this year. The company says it's pausing its full-year guidance due to the volatile macroeconomic situation. Mattel makes nearly 40% of its products in China, which Trump has hit with a 145% tariff. And coming up, we discuss the state of the Mideast equity capitals markets after a string of IPOs defy market volatility. Citi's Rudy Saadi joins us next. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. The S&P halted its longest rally in about 20 years, while Ford suspends its full-year guidance, warning auto tariffs will crash into profits. Gaza step up. Israel's security cabinet votes to intensify military operations, calling up tens of thousands of extra reservists, while also deciding on aid distribution in the Palestinian territory. And we'll be speaking to Citi's head of MENA ECM on plans for a new residential REIT listing in Dubai, capitalizing on the Emirates real estate boom. It has just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Dubai. A bit of a pullback yesterday for Wall Street. We had the S&P slip, actually, by the end of the day, ending the session in the red. So this is, it comes to an end of a very long winning streak, the longest winning streak in almost 20 years, and a bit of red on the boards this morning as well. S&P futures down about 0.2%. Attention shifting, of course, to that Fed meeting tomorrow. But then some of the company earnings that came through, the fact that Ford pulled their guidance, they've warned about the impact of tariffs. tariffs. Mattel also warning about the impact of tariffs, and the likes of Palantir also slipping. So that's pulling down some of the tech stock names too. As for today, the handover from Asia Pacific, mostly green, up about 15 basis points. We got a weaker than expected Kaishan services number coming through from China. So some more negative signals coming through from the Chinese economy at a fundamental level. Brent, a bit of recovery today. It's trading 1.5% firmer, back up at $61. This time yesterday, we were trading at 59 after that OPEC Plus decision on Saturday, surprising the market with extra production barrels to bring back to the market. And then the USD trading slightly firmer today, up 0.1%, despite the fact that, of course, it is being heavily sold into versus the Taiwanese dollar. That's our chart of the day. Just take a look at how substantial this move has been for the TWD versus the USD. It's strengthened about 10% in the last couple of trading sessions, the biggest move since 1988. And if you look at positioning, essentially this is telling you that we haven't seen a positioning of this extreme for at least 17 years. So it's been a remarkable move versus the Taiwanese dollar, and perhaps speaks to some of the hedging activity or the fact that these Taiwanese accounts hold so many U.S. assets on an unhedged basis. So they've been coming back in and selling dollars versus Taiwanese dollars. So something to bear in mind as we think about FX. All right, let's turn to equity capital markets in this region, which are defying the volatility induced by Trump's tariffs. An investment conglomerate owned by Dubai's ruler plans to list a portfolio of residential property assets on the local exchange. Dubai Holding is seeking to capitalize on the Emirates real estate boom. Joining us to discuss, I'm really happy to say, is Rudy Saadi, Managing Director and Head of MENA ECM at Citi. Really good to have you with us. And of course, Citi are one of the book runners on this deal, on this REIT. Talk us through this structure, because it's a bit surprising, I would say, to see a REIT come back to this market. It's been a long time since we saw a REIT issuance.
Correct, Jumana. The last REIT in the Emirates was in 2017.
Right.
It's a very solid asset, a fantastic opportunity for local and international investors to get exposure to real estate. It's one of the largest developers and investors in real estate, and like you said, it's sponsored by Dubai Holding. 1.8 billion dirhams in revenues, 10% growth CAGR over the past 3 years. It's an opportunity to fix the REIT market. The last one, like we mentioned, was in 2017. It didn't trade really well in the past. Today, you're bringing a solid asset that is very stable, with solid revenues, and you're taking it public.
Yeah.
And we hope with a sustainable valuation that will trade very well.
Given that there aren't that many other alternatives around, it's a relatively newish type of product to expose investors to. Do you think that there's going to be appetite for this one?
Absolutely. Look, you have two options on how you take a company public, either through a standard IPO, corporate IPO, or you do a REIT if it's linked to real estate. In a REIT, you have to pay a minimum of 80% in net income as dividends. So this is an opportunity to pay that to investors. And in addition to that, you're delivering growth, all inside one perimeter. So that's why it's a fantastic opportunity. We're very excited about it.
Yeah, more broadly speaking, how are you seeing the outlook for ECM in the MENA region this year?
Look, at the start of the year, it was a little bit slow because Ramadan came in a window that is normally active, and we were supposed to launch maybe 1 or 2 transactions prior to the Eid break. What happened is the tariffs were announced, and obviously there was a pause. What's very important for this region is sentiment. So tariffs do not really impact us because it's 10% only. We're not an industrial economy. We don't export a lot to the U.S. So from a technical perspective, it doesn't impact us. But sentiment is very important. Now that markets are much more stable, volatility is lower, we've seen the Dubai Residential REIT announced. We saw Flynas IPO also announced. Yeah. So the pipeline is very promising.
Yeah, I was going to say, so just in the last couple of days, we've had a whole bunch of IPO announcements. We had, Dubai Holding, you just talked us through it, Flynas. We've had SMC hospitals in Saudi. What is it about the timing now that many of these issuers have said, okay, we're willing to look through the short-term volatility and just come to the market anyway?
Look, volatility is much better and markets are more stable. Yeah. One thing is the appetite from international investors that is critical. Joanna, if you look at the net foreign inflows towards this region, $3 billion positive towards the UAE and $300 million towards Saudi Arabia. In fact, Saudi Arabia was more than $1.5 billion positive. And now international investors restarted to invest in the secondary market. So with the appetite from international investors, emerging market funds, opportunity to enter the MSCI Emerging Market Index, you definitely want to launch prior to the summer.
Yeah. What about secondary market liquidity? So we're talking about primary listings, IPOs. And then afterwards, what is the liquidity situation like if you want to secondary trade in some of these equities?
Look, liquidity has improved in the region, but honestly, we have, and we can be in a much better place. We need to see more issuance in secondary markets, accelerated equity offerings, fully marketed offerings, convertible bond, exchangeable bond. This is where we generally need to see more. We've done the $2.8 billion held down in ADNOC Gas. That has helped ADNOC Gas to go into the MSCI emerging market, hopefully. SALIC and DIWA will also follow in the MSCI emerging market. But this is one area where we have to see more in the Middle East. It's UAE and Saudi.
Yeah. And in terms of the investors, so predominantly, and this was in the past, you get a lot of interest from local investors. Has that changed? Are you seeing more international demand?
We've always seen a lot of international demand. Where we have to do more is honestly help more with allocations to international investors. You have a top international emerging market fund. They do all the work, and they come and invest in an IPO or in a secondary offering, and they get a tiny allocation. So the demand from international investors is always there if it's an attractive asset. The local demand is very strong, and honestly, we cannot price a transaction in this region without the local demand and retail investors. This is very important.
Yeah. Let me bring it back to where we started, which is just talking about sort of, I know you're not a real estate specialist, but given you are the book runner on this REIT that's being launched, Dubai residential property has done really well, and it is a topic that we talk about a lot on our show, and I think it's one of the best performing residential property markets globally. Can that continue? And does the success of the REIT depend on how well the Dubai property market does?
Like you said, I'm not a real estate expert, but I'll try to address the question. Look, this REIT is actually, they offer opportunity in luxury and affordable properties. Rent and occupancy is close to 100%. So that alone should attract investors to invest in the REIT. Now, on the outlook to real estate, you're right. There is a lot of news and articles that maybe rent will go down. God knows, honestly, but the strength and the stability of that REIT should excite everyone to invest in the REIT.
God knows, or Trump. Trump maybe knows, or maybe he doesn't, actually. Rudy, thank you so much. Really good to chat to you. We'll keep an eye on how the REIT does. Rudy Saadi, Managing Director and Head of MENA ECM at Citi. And, of course, they are one of the book runners on the new Dubai Holding Real Estate Investment Trust. All right, Saudi Arabia's Flynas is pressing ahead with its initial public offering, defying market volatility as it aims to become the first Gulf airline to list in nearly 2 decades. The low-cost carrier, backed by billionaire Prince Al-Walid bin Talal, plans to offer about 17 million new shares and 8 million treasury shares, while existing shareholders are offering 25.5 million. The total offer amounts to about 30% of Flynas's share capital. Now, Flynas has been expanding its fleet with orders for up to 160 Airbus jets in 2024 and reported revenue of $2 billion and net profit of $116 million in 2024. All right, coming up, Indian billionaire Gautam Adani is eyeing investment options in South African ports. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. India's Adani Group is scouting for ports in South Africa as it revives overseas expansion plans. The company, founded by Indian billionaire Gautam Adani, is looking to boost its presence on the continent, also eyeing opportunities in East and West Africa. The renewed push comes after a series of setbacks last year after the U.S. Department of Justice indicted Gautam Adani and some key executives in a bribery probe. He denies all the allegations. So for more, Bloomberg's Onziro Ganga joins us now from Johannesburg. So tell us about Adani's plans to expand operations in Africa. Onziro.
Good morning, Jumana. So what we know is that they'll be looking at brownfield projects as opposed to greenfield projects. They'll be bidding for existing terminals where they can build them up a little bit, modernize, refurbish, and then begin operations. And like you mentioned, they're scouting in East Africa. They're looking at West Africa. But the next frontier market is actually South Africa for them. And this comes at a time where the South Africa Port Authority is calling for bids to build and operate a terminal at the port of Durban. And even though Adani is yet to formally respond to Bloomberg to confirm whether they'll be bidding, this is an ideal opportunity for them to get into the South African market. And this is tied to their goal of expanding their overseas operation, doubling it to 15% by the year 2030. And we've seen them do that previously in Tanzania, where they acquired 95% stake in a container terminal. And they also signed a probably 25-year concession to build a second one. So they're trying to get into this market. And if you look at how they're doing these projects, they're trying to mirror the Belt and Road Initiative.
Yeah.
They're mapping India's trade routes so that they can take advantage of those lanes and also complement it to other businesses of theirs.
And yet, Ondiro, last year, the U.S. Department of Justice indicted Gautam Adani and some other executives. How has that influenced, if at all, their decision to expand into other countries and other jurisdictions away from India?
Jumana, it has come at a significant cost. If you look at Kenya, Adani had a deal of $2.6 billion, not only to build power transmission lines, but to also build and modernize the Jomo Kenyatta International Airport. And despite public pressure about this deal, the president was touting for it. He was saying public-private partnership is the way to go because Kenya is at a place where they're struggling to raise money locally. They can't go to the market to borrow. And so Adani was one of the ideal options to try and develop infrastructure in the country. But when these bribery charges came to light, it forced the president to pull back, and so this deal fell apart, even though currently we're seeing them try to lobby in the U.S., trying to get these charges dropped so that they can minimize the financial impact and also try and repair the reputational damage that they have suffered. If you look at the African continent, it's just a place currently where they're looking for investment of this kind and of this magnitude. Again, most of these countries are tied for cash and the debt burden is increasing, so they cannot go to the market to borrow. So the moment that Adani's legal woes are over, we'll see more African countries being open to quoting them and doing projects with them.
Interesting. Bloomberg's Ondiro Ganga in Johannesburg. Thank you so much for the reporting. Now, Saudi ports operator Red Sea Gateway Terminal is evaluating whether to bid to develop and run a fresh produce terminal at Africa's biggest maritime hub. That comes as South Africa's state-owned ports operator issued requests for proposals for a terminal operator to build and manage the development at the Maidon Wharf at the port of Durban. The terminal would be built and managed for 25 years and would have a capacity of over 7 million tons of cargo annually. South Africa is seeking to boost private participation in its ports, whose poor performance has dragged down the economy. Nigerian President Bola Tinubu plans to sign an executive order that will prioritize the procurement of goods and services from local firms. The move bears some semblance to President Donald Trump's America First agenda that champions U.S. interests. The order will seek to change how the government spends money, procures, and grows the economy. If implemented, it would direct a significant proportion of the nation's planned expenditure this year to local manufacturers and service providers, providing them with a huge boost. And Apollo Global Management CEO Mark Rowan is backing President Trump's economic goals through tariffs, but he tells Bloomberg the U.S. also risks slowing the economy if it doesn't resolve the uncertainty around trade policies.
What the administration wants to do, in my opinion, is not wrong. We are the freest trading country in the world and have been since the end of World War II. It is not clear to me that we have to be, or that we should allow allies and strategic competitors to inhibit our access to their markets. We can take issue with how it's being done and the uncertainty it's creating, but the president and the administration start with a really strong hand. Low unemployment, good job growth, massive capital investment over the last 4 years and continuing in the U.S. So now is actually a good time, but we have uncertainty. And in the face of uncertainty, people do not make new investments, they do not hire, they do not make moves. We likely will cause 2 quarters of negative growth if we, in fact, don't resolve the uncertainty. So until we have resolution of what the rules of the game are, it's going to be slow.
A lot of people talk about the potential for a recession, but little are people talking about the severity that could exist in the potential for a recession?
Look, now we're talking about forecasts and projections. In our firm, when we were raising rates 300 and 400 basis points, we talked about a non-recession recession, which is a correction in asset prices, but not necessarily in labor. We kind of see the same thing happening again. It's not to say we won't have some fallout and some adjustment, but we're starting from a place of 4% unemployment, good job growth. We are building infrastructure, we're building semiconductor plants, we're absorbing massive amounts of foreign direct investment. Like it or not, we're building Inflation Reduction Act factories. And now the president is channeling capital from around the world to come back here. Some days I wake up and worry about capital. Most days I wake up and worry about where will we get all the people to do this.
Apollo Global Management CEO Mark Rowan speaking with Bloomberg's Sonali Basak at the Milken conference. So many really good interviews coming through from Milken the last couple of days. All right, coming up, Friedrich Merz takes over as German Chancellor later today. We are live from Bundestag to discuss the challenges facing Europe's largest economy. That is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, Turkey's annual inflation fell to 37.9% in April compared to 38.1% in March. The central bank raised borrowing costs to curb demand for foreign exchange and may keep lira rates elevated in the short term to restore confidence and attract inflows. The political shock from the imprisonment of key opposition figure Ekrem İmamoğlu has sparked one of the lira's steepest drops in years. The currency fell over 10% against the dollar in a matter of hours on March the 19th before the central bank intervention stemmed the losses. And switching over to Germany, Friedrich Merz has vowed to hit the ground running when he takes over as German Chancellor later today. With a stagnant economy, war in Eastern Europe, and support for the far-right AfD strengthening, Mr. Merz will have a full tray. Bloomberg's Oliver Crook is at the Bundestag in Berlin. Ollie, quite simply, what do we know about what Merz's priorities are going to be as the German Chancellor? There's been so much talk about his huge fiscal plans, questions as to whether actually he'll be able to implement them.
Yeah, that's really been the headline, Jumana, is that trillion euros worth of spending that has been basically promised by this government. The question is, at what speed will it be able to be deployed? Will they be able to agree on what to spend it on? But for Germany today, it's really about bringing in a new chancellor and a new era here. So in the Bundestag, in about 2 hours right behind me, they're going to be voting on bringing in Friedrich Merz as the new chancellor of Germany. He will then go consult with the president, and then he'll be sworn in at about noon, and then the rest of his cabinet as well. And when we think about the structure of this government going forward, we should say that the foreign ministry and the economy ministry, two of the key ones, will be held by the CDU, by Friedrich Merz's party. But then you're also going to get the finance ministry and the defense ministry going to be held by the junior coalition partner, the SPD, which actually got a historically low turnout. But they're going to be also in large control of dispersing that trillion euros worth of assets and debt-fueled sort of spending that the German government has promised going forward. But as you say, Jumana, this is a very challenging backdrop for this chancellor coming in. We're talking about 2 consecutive years of contraction. If the tariffs hit hard on the German economy, which they are expected to do, that could be a 3rd consecutive year of economic contraction. That has literally never happened, Jumana, in 3 consecutive years of contraction since in sort of modern German economic times. It just hasn't happened. And then you also have this question of immigration. So this is going to be a government that is going to be characterized by looser spending, tighter immigration at a time when the AfD is now polling at basically the same exact level as the CDU and has actually even overtaken the CDU in some polls.
Yeah, so you brought up AfD, and I think it's important to talk about them because they are technically the 2nd largest party in the parliament breakdown. But then recently, the country's spy agency classified them as extremist, and there have been calls from some parts within Germany to ban them entirely. How far along are we with these discussions? Is there a situation where the AfD could end up being banned, Oliver?
Potentially, ultimately, but there is a lot of caution around sort of trying to pursue a full ban of this party. That is obviously something that is taken very, very seriously and has got a lot of sort of caution from a lot of the political establishment in Germany. But we should say, Jumana, that the sort of the institution that is here to defend the Constitution has put out this release, this report, 1,000 pages on the AfD, and has determined that many of their positions are basically threats to the Constitution and threats to the democracy within Germany. And I'll quote just directly on what grounds they're saying that that's true. They say that the party's prevailing understanding of people based on ethnicity and descent is incompatible with the free democratic basic order. It aims to exclude certain population groups from equal participation in society and subject them to unconstitutional, unequal treatment. The issue here, Juman, is we don't actually have the full report. We only have a sort of flavor of it. It probably would be helpful in understanding how the agency got to this point if they were to sort of put this out to the German population in general. And of course, for the AfD, in their part, they're saying this is a sheerly political ploy. We should say that this is theoretically a completely neutral investigation that is done by this agency, but then it's also been reinforced by Marco Rubio, who on Twitter came out and said that basically that Germany just gave its spy agency new powers to survey the opposition. This is not democracy, it's tyranny in disguise. That is the support that is coming from the Trump administration. And these are all part of the political backdrop and, of course, the economic backdrop facing Friedrich Merz as he comes into chancellorship today.
Yeah, and then key also will be the transatlantic relationship between the new chancellor and President Trump. So all eyes on that as well. Bloomberg's Oliver Crook outside the Bundestag in Berlin on this historic day in Germany. Let's take a look at how markets are faring as we round up the show. Equity futures dipping towards red, slightly coming off today, down about 0.2%. NASDAQ also down about 0.5%. Palantir, one of the stocks that was down quite a lot yesterday in trading, 9% weaker after their earnings came out. Attention will turn to the Fed meeting coming up tomorrow. And of course, later in the week, a big one for some of the other central banks around the world. We've got Bank of England, we've got Riksbank, we've got Norges, all of that happening on Thursday. European futures down about 0.8% as well. Though we are seeing some stabilization in oil markets today. Brent is back up at $61. So we'll see whether it stays there. There you have it. It's up 1.6% today in trading. All right, that was it for our show. Horizons, Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.